Hello everyone. On the weekend, August 18th, I posted my extensive weekend newsletter where I went over the market in depth via the technical analysis. Anyway, doing a quick follow-up video tonight. This is the daily chart of the S&P 500. This is one of our KISS trend systems. Anyway, market followed through once again today. The S&P was up about 54 points. So I'm going to do a quick recap of what I discussed on the weekend, and we'll analyze everything going forward. Plus, I added a bunch of trade ideas for you guys, actionable trade ideas to take. Again, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, which are my passion. We have 21 SPY and ES mean reversion systems with approximately 90% winning trades, and of course, our amazing KISS systems. Here you can see a list of them. The UPRO recently went back long on August 9th. That trades up 14.5%. NVIDIA recently went long on 8/12. That trade's already up 15.6%. Amazing systems here. You should really check us out. But anyway, let's get back to this quick video market update at hand. Like I said, I just did the extensive weekend newsletter, so I'm just doing a quick recap. This is our backend recorder for our website subscription service for our subscribers. I'm going to go ahead and get that recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, August 19th newsletter. As you know, guys, I just did the extensive weekend newsletter. Hopefully you watched that. And also, Steve Nelson, as you know, he is now on vacation. He is in Europe. He's gone until September 3rd, so I'm going to be doing all the newsletters until he gets back. By the time he gets back, I'm going to be worn out. That said, guys, and I think a lot of you would understand, I'm going to try to cut back some of the newsletters here and there instead of doing these big, long newsletters every day, just because, a lot of times things don't change that much, and it's just too much work for me to do every freaking newsletter like that. So anyway, I'm going to quickly recap what I talked about over the weekend. This newsletter is divided into 6 major sections. By the way, guys, I added quite a ton of new trade ideas, actionable trade ideas: CX, AKAM, KVYO, ALNY, CRDF, CNC, and CB. And of course, our mechanical systems continue to kick ass. As far as the market, like I said, we had a nice follow through in the market today. The S&P 500 was up about 54 points. Both the S&P and Qs pushed right through that small supply zone that I showed on the weekend. Got a little typo there, it says demand zone. That said, there's an open gap above on the S&P near 5640, and the Qs are now into another supply zone. And there now is finally some MACD divergence on a 60-minute chart. So anytime I'm looking for a pullback, but clearly all the trends are up. Long-term trends up, intermediate-term trends up, and the short-term trend is up, except for some divergence. Okay. News-wise, FOMC on Wednesday. Not a lot of news otherwise this week. You have some initial jobless claims, S&P global PMI, and of course any potential geopolitical risk. All right. And let's go ahead and get started to talk about a few admin things. So first off here, I just sent out this alert here in after hours, but our mean reversion systems have been flat lately. They all bought that pullback when the market had that correction in July into early August. Many of those went long and caught those very nice winning trades. That said, today the ES breakout system went long. It took a first entry. Okay. Again, we run both these mean reversion systems on ES futures, and we run it on the SPY ETF. Okay. Anyway, it only triggered on ES futures. It did not trigger on SPY. I sent out a trade notification to let the website know. That said, I took a half position because we are quite overbought here, and if we get a dip, I may elect to add the other half of the position. Okay, but again, I emailed that out already to subscribers. Next, just covering some other things I discussed on the weekend. Image number 3. This table I worked out on the weekend. It is a collection of high quality paying dividend stocks that I put together. Many of these have paid for many, many years very consistently. I grouped the table into 2 parts. One were The stocks and ETFs pay monthly dividends, which I personally like. It's nice to get that cash flow per month. And the ones that pay quarterly, I have them broken down as far as there's a dynamic link to the Yahoo Finance page where you can read about it. There's a link to the live stockcharts.com chart. There's the annual dividend yield, quite a collection here, and the typical ex-dividend dates. So you can see here, JEPQ typically pays on the first of the month. It focuses on the Nasdaq 100 stocks. And then besides just that, it also sells call options to reduce drawdowns. Some of these also sell call options, and then with the premium, we'll buy put options as protection. So when there's a correction, it'll correct less than the index. So those are pretty cool. But there's a whole variety of things here. Again, I also have them broken down by sector. You can see some REITs, some energy, utilities, asset management. Here's the S&P Global Risk Management ETF, pays about 12.2%. Okay. So nice resource here. Again, it's not for everyone, but there's quite a few people out there, older folks especially, who like dividend stocks. And this is a nice collection. Okay. Again, I gave a link in the description where you can get this live table. It's a Google spreadsheet, so I provide you the link to that so you can pull this up and use the hyperlinks. I can't give investment advice, but if I was taking the stocks from this list, what I would be doing is not just picking the highest one here. The highest one is OXLC, as you can see, 20.4%. I do own a little bit of that one, but typically what I would do is take the capital I'm going to put into the dividend stocks, and I'd spread it to 5 or 10 of these. Just pick, that gives you a nice broad diversification. Okay, instead of just picking the highest ones. That's not always the best option, but nice resource. It's already on the website. It's in the education section. Next, image number 4. So here is the KISS systems. You can see today, new smart trailing stops at NVIDIA, SSO, Tesla, UPRO, AVGO just went long, but you can see NVIDIA is already up. That trade's already up 15.6%. Previous system made 34%. SSO is already up 9.5%. UPRO's up already 14.5% from its entry on August 9th. And the previous trade it made 21.5%. So awesome trades here for the KISS systems. Again, hopefully you guys have been playing these. Next, image number 5, regarding the high performance systems. Again, I already discussed these on the weekend, like I said. And I sent out an email notification this morning. In order to, if you've went here and you've added your phone number for the SMS, you can see the SMS here. When you go there, you get an option to add your phone number. It'll then send a code to your cell phone. You got to come back to there and enter that code there. And that'll confirm to the system that you're able to receive text messages. Okay? It's easy as pie. That said, I did have one guy that said he wasn't receiving messages, but under further investigation, he had a spam filter that was blocking the messages. So if you ever sign up and you're not receiving the messages, it's probably something like that. It's probably your carrier or something on your end that's blocking it. You can whitelist our phone number. Okay. Anyway, that said, you need to go here and set favorites by clicking the stars. If you don't do that, you're not going to receive any notifications like you did last week. Okay. For me, I have all of them selected in the high performance tables just because I want to see all the alerts. But, you may not want to receive all the alerts because this can be quite active. With all the new entries, the new trailing stops, you might get 10 and 20 text messages a day. So maybe you don't want all of these. So just select the ones that you want and you'll receive text messages. Okay? Anyway, nice gains here. Look at some of these gains already in the high performance systems. Excellent. Next, image number 6. I already discussed this on the weekend. Here's what some of the statistics look like in the high performance area. You have these various tables, the annual, you have all the individual trades, you have a profit target, you also have the chart, but you can see the annual is broken down with the KISS system compared to the buy and hold, and there's just really no comparison. I mean, look at yen here, up This is as of the weekend, up 25.7% versus 7.6% buy and hold. And look at the max drawdown. Only 9% for the system versus 45% for buy and hold. So that's where the KISS systems shine, with the extra performance, but with the drawdowns, they can be 5 and 10 times less than buy and hold. Okay. Again, you also can see the average time in trades. This one is about 8 days, 8.24 days. Average days in winning trades is about 13 days. Average days in losers is only about 3 days. Next. Again, here's the area where you enter your phone number for the SMS, right from the SMS area. Once you enter your phone number, it'll send you a code. You come back here, add that code, and that'll confirm to the system that you're able to receive messages. Again, once you do that, you need to go to the high performance table and select those favorites. If you don't select any favorites, you won't receive any text messages. Okay, enough of that. Let's move on. Get through this quickly. Image number 8 shows the index sector table, what transpired today. Like I said, nice follow through today, nice solid gain. Broad-based market. You can see all the major indexes were up nicely. And as far as the 21 market sectors, every single one was up today, even defensive. So broad-based rally. Currencies, US dollar continues to melt down another 0.5%. That's helping some commodities and especially the precious metals. Bitcoin is up 1% today, though it's been lagging the general market. Commodities, now the general DBC was down today, 0.5%. Largely because of crude oil, which lost 2.5%. But big move in natural gas. Remember on the weekend I was showing an inverse head and shoulder pattern? Well, that's starting to play out. Copper up, uranium, all those bags are up. Precious metals, now gold is only up slightly. There's a potential wedge forming there. But silver up 1.6%. And GDX, the miners, up 1.9%. And we continue to see a pullback in the 10-year, 30-year Treasury yields. Also, the yield curve continues pulling back. The previous week, this hit 0.98. It's now back to 0.95. Next, image number 9 shows the economic news calendar. Like I said, the big one this week really is the FOMC. There's some other stuff here too, which I already discussed. By the way, earnings, NVIDIA is next week, August 28th. So take note of that. Moving on to the indexes, chart number 10, here's the Dow. Like I said, beautiful rally off that lower trend line support, which we drew ahead of time. Again, you simply had a perfect 3-wave ABC pullback. Look at that, ABC. By the way, that's things that the KISS systems look to buy. They look to buy these ABC 3-wave pullbacks. But anyway, pretty much a V rally. Now all the way testing this downtrend line, as you can see. So potential resistance, and there is a little supply zone right in here. We'll see if we can push up higher through there. We pull back soon. But again, it's been a very strong uptrend. And that's typically how this market has been, guys, over the last, I'd say, 5 and 10 years with all the government intervention and Fed. Market doesn't behave like it did, I remember 20 years ago or 30 years ago. You wouldn't get these V-ish rallies like this all the time. You'd rally up a bit and then pull back. Anymore, you get oversold and it just V's up. It doesn't let you in, right? That's why it's better to have triggers earlier ahead of time. The KISS systems went long on the indexes a couple weeks ago. Next. Chart 11, here's the weekly S&P. Again, it's only Monday, but just showing you how 3 weeks ago, almost we bounced right off that demand zone that we showed. Nice rally. Not quite back to the highs, but getting close. Chart 12, here's the daily KISS trend system. Like I said, up and away. You can see how the system went long. Basically 1, 2, 3, 4 candles off the lows. Didn't catch the exact low, just like it didn't get out at the highs, but it went back along nicely. And it's been riding this uptrend nicely. We're above the ATR, above the 50-day moving average now. And you can see so far there's been 2 smart trailing stops. I'm surprised that this didn't raise today. My guess is we may see the smart trailing stop jump up tomorrow. Next, chart 13, here's the 4 time frames. Again, nothing really to say here. We're now above the ATR on all these time frames. So that's now your support on a pullback. Chart 13, here's the simple daily S&P. Remember, we had that simple 3-wave ABC pullback. That's all we had. This wasn't 5 waves down, it was 3 waves. And that's always bullish in an uptrend. So we've rallied up, pretty much a V rally. We took out the downtrend line. There was a supply zone here, which we're starting to take out. We have another little gap up here, which I'll show you in the charts below. Chart number 15, here's a zoomed in daily view. Again, we bounced off that larger demand zone on August 5th, that Monday low. We've rallied up. We took out this little supply zone here today. Now there's an open gap here right around the 56.39 area. That's likely a magnet here in the short term. New highs aren't very far away. Chart number 16, here's a 60-minute chart. Again, as I stated in the comments, we took out a supply zone. There is a small supply zone right here, which we're right into it. Now, if we continue pushing through here, there's this big open gap up here that could be filled. All right. That said, we've had a heck of a move here. To me, this looks like a wave 1, 2, 3. It looks like we're in a wave 3. Eventually, we're going to get a wave 4 pullback. All right. That said, it's likely to be a 4th wave and would be a buying opportunity. We do have some MACD divergence setting up here, finally on the 60-minute charts. Chart number 17, here's a half-day chart. Again, you can see various gaps. Okay, there's a gap to the downside that could be hit on a pretty good pullback. Again, right now we're in this wave 5 of 3 still. Eventually looking for a wave 4 pullback. Notice that open gap above still. We're getting close to that already. Chart number 18, here's a 2-hour chart just showing you the same thing. Remember this horizontal resistance around the 55.80 I talked about on the weekend. We took that out today. We're now well into this area here. Another little supply zone enters that gap above. Chart number 19, another half-day chart. Chart number 20, here's a 30-minute chart. Again, like I said, to me, I see 3 waves right now. So when we get a pullback, I'm viewing it as more of a 4th wave pullback. Next, chart number 21, here's the triple Qs, KISS daily trend system. Again, you can see nice move up since the system went long there almost 2 weeks ago. So far, 2 smart trailing stops. My guess is we'll see another one here maybe tomorrow. Chart number 22 is the 4 time frames. Again, pretty similar to the S&P, up and away. We're above all the ATRs on all the time frames, even the 78-minute. Chart number 23, here's the weekly chart. Again, not much to say here. We bounced off, like I covered this on the weekend, we bounced off that 50-week moving average, off the weekly uptrend line, and the demand zones. You had 3 technical things coming together. Anyway, so far, 2 weeks up. It's very strong candles, and we've started this week up already. Chart number 24, here's a 2-hour time frame of the triple Qs. Notice we filled that gap this morning, or today. Now we're into a little supply zone here. Right? Now if we can clear that, there's an open gap up here. That said, on the next pullback, we got an open gap below. There could be a magnet and a new demand zone that should be support. Chart number 25, here's 2-hour view. By the way, that was TradeStation, guys, my systems. TradeStation makes that alarm whenever the 8 p.m. Eastern Standard Time hits. Anyway, you can see we filled the gap on the Qs today. We're now into another little supply zone. You can see the open gap above. Also, here's a tight demand zone right here, down to about 472.50. So that is now support on a pullback. Chart number 26, there's a 60-minute, 2-hour chart. And chart number 27, here is a 60-minute view. Just again, everything's showing the same thing. Notice the little MACD divergence here on the 60-minute, just like you have on the S&P. Chart number 28, here's IWM. Remember, IWM broke out of this coil back in July. Nice rally up, formed a divergent high. Then a big sell-off. Found support in that demand zone just over the 200-day moving average, rallied up. Now it's rallying up to back test this broken support, now resistance. Chart number 29, here's the 2-hour view. Again, you can see we're right. There's a little supply zone here. So we'll see if price pauses here soon or not. Otherwise, there's an open gap down here on a pullback. All right, guys, again, like I said, nice move up today. No major changes, like I said, from the weekend. Just wanted to do a quick update. Moving on, chart number 30. Sorry about that, guys. I had a issue here. I had to refresh the chart. So actually, chart number 29, not 30, is the VIX. Remember, I talked about this on the weekend. On August 5th, with the VIX spiked up to 65.70, that marked the bottom in the market because of the VIX spike. That's played out. Chart number 30, here's the daily VIX. Again, that VIX Bollinger Band buy signal there on August 6th when it closed back inside the Bollinger Band was an excellent buy signal. It's now back down to its 200-day moving average. Okay. Chart number 31, here's the 60-minute chart of the VIX I showed on the weekend. VIX was slightly down today. It was down 1% despite the, with the market up. Wasn't down that much though. But that said, there is some active divergence developing here. There is some supports down here as well to monitor. There's quite a few open gaps. The VIX likes to fill these gaps. You got some open gaps to the downside, which would allow for more market rally. And you also have some gaps to the upside, which could eventually be filled when we get that next pullback, like the fourth wave I discussed. Chart number 32, here's that breadth thrust chart I talked about. Just showing this because it's now back overbought. So it was oversold on August 5th, and it's now worked its way all the way to overbought. That said, did not confirm a breadth thrust signal. A breadth thrust signal is something like you see last October when it goes from oversold to overbought in less than 9 days. This took just over 9 days, so it wasn't a true breadth thrust signal, but nevertheless, when this got oversold, it was a good signal. It's now overbought short term, so we could see a little pullback here any time. Chart number 33, this chart shows the S&P versus high yield corporate. Again, high yield corporate was making new highs when the S&P was not. That was a positive divergence. Usually high yield corporate leads. And you can see the two are very highly correlated most of the time. Chart number 34, TLT 20-year bonds, slight bounce today. So far, it's been a nice move out of that coil pattern we showed about a month ago. Chart number 35, here's TMF. That's the 3-time leveraged ETF for TLT. That was the way to play it. You had a nice breakout from this coil, pulled back. I mentioned this area would be a good support. So you could have bought that again, and it's been a good trade. Chart number 36, 10-year treasury yield. Still extremely weak here. Still below its 9 EMA. Chart number 37, there's the weekly view. Remember, it bounced off that 200-week moving average a few weeks back. As far as the market sectors, most of these, like I said, all the sectors were up today. Here's XLK Technology. It's now into this supply zone. So that's an area to watch. If it can get through here, you got an open gap above that could be the next magnet. Chart number 39, semiconductors, same deal. It's pushed higher. It's now closed right at its 50-day moving average, the underside of it. There's also an open gap right there too. Chart number 40, here's XLP, consumer staples, and this continues to be a super strong sector. Chart number 41, financials. Again, nice rally off that lower trend line, basically a V rally. It's now back to the highs, a little triple top. Chart number 42, transports, breaking this downtrend line. Great example of supply and demand. Perfect rally off that supply zone a couple weeks ago. Perfect sell-off from the supply zone back in July. We had those drawn ahead of time. Chart number 43, healthcare. Again, up and away. A couple weeks ago, it was near the lower channel line, but it held it. That was a good area to actually go along with the type stop, buying support. We're now at the top of the range. Chart 44, utilities continue pushing higher. Slow mover, it's utilities. They don't have big percentage moves like some of the other sectors and the tech stuff. Chart 45, knee, that's a utility stock. Been talking about this one, this cup and handle look to it. Still looks decent. Chart 46, IYR real estate pointed out this tight coil in the weekend, and it's very tight. Let's see if this can pop higher. Chart 47, energy, it's been meandering higher after holding that little demand zone down there. Otherwise, it's still, below long-term resistance. Chart 48, China ETF FXI. Again, beautiful rally off that demand zone. That was a great area to take us long. Nice follow through today. Chart 49, yen. That's the triple ETF for the Chinese market. Again, nice rally off the support. Off the highs today, but still decent move. Moving on to commodities, chart 50. Here's DBC. Like I said, DBC down today, primarily due to crude oil in the energy market. Chart 51, there's the weekly. Again, you have this big weekly coil that's been forming the last couple years. Chart 52, crude oil on the weekly, this big coil pattern. So let's see which way this eventually breaks. Chart 53, UNG, natural gas ETF. Nice rally today, up 4.4%. So guys, back in early August, I showed this falling wedge with the MACD divergence. I said looked like a decent low-risk trade, and it was. Great trade out of that wedge. And I said now, after that rally up to resistance, look for a higher low, potential inverse head and shoulder pattern. So this may be forming. I'm long natural gas with a stop just below Friday's lows, the right shoulder low. Little pro tip, guys, these falling wedge patterns often morph into inverse head and shoulder patterns. Little trick of the trade. Chart 54, Boyle, that's the leveraged ETF. That's actually the one I own. And here's the 2-hour chart of Boyle I showed in the weekend. I said, watch for support around that 61 fib, and it gapped up today. Chart 56, copper, also following through, up about 0.9% today. You have a perfect three-wave ABC pullback from that correction from the May highs. Okay, that was a good area to take a shot long. How would you buy copper? Well, there's a couple ETNs. CPER is one of them. You can see it's had the same move off of that demand zone. Chart 58, DBA agriculture. Recently found support at the 200-day moving average. It's been chopping around here. Slight close above its 50-day moving average. Let's see if it can start building higher now. Chart 59, here's the weekly chart. So to me, this looks bullish. After this big rally from the cup and handle breakout, you've had simply on the weekly chart a three-wave pullback, A, B, C. So to me, that could be the low. Put a swing stop there and ride it up. Next, chart 60, corn. Remember, I've been stalking corn. This falling wedge finally broke out today, up 1.7%. So I bought a little bit of this today. I actually bought some last week and added to it this morning. Next, chart 61, Bitcoin. This is the weekly chart. Again, it's up slightly here today. Remember, a couple weeks ago, found support at this important area. Potentially putting in a fourth wave low. If this is the correct pattern, we'll eventually see a move to new highs and a wave 5. Chart 62, there's another view of Bitcoin. You can see the same pattern here. And you have potential little ABC, higher low pullback there. Next, chart 63, US dollar continues to melt down. Look at this. I said this demand zone was getting weaker. The more times you test the support, the weaker it becomes. Kind of like jumping up and down on a frozen lake in the same place too many times. It weakens the ice. So weakens that support. Kind of looks like it wants to break down. There's no MACD divergence here or anything. This looks weak. Chart 64, there's the weekly view. Again, the bearish view would be this is a wave 3. If this continues lower, this wave, potential wave D here would be negated. Either way, looks either both counts here are bearish for the dollar. Next, chart 65, Japanese yen. I said this looked like a bull flag trying to break out. Chart 66, there's the weekly view of FXY, Japanese yen. Next, moving to precious metals, chart 67, gold up slightly today. Remember last week it broke out of the coil, but gold didn't move up much today. What really moved up was silver and the precious metals stocks, the miners. Chart 68, here's gold on the daily. I showed this wedge on the weekend, and you can see gold was up slightly today, but it's still technically in a wedge here. So that does have my attention. Chart 69, here's the weekly view. Again, we're working on this wave 5 of 3. I show this because once this does complete, I'm looking for a bigger ABC pullback as a wave 4. Chart 70, here's gold on the monthly. Like I said, long term, super bullish chart. It should go much, much higher over time. I'd say over $3,000 an ounce. That said, once this wave 3 is complete, I'm looking for a pullback. By the way, there's a demand zone here. That could be a good area to find support. Chart 71, silver continues up. Silver to me had a perfect 3-wave pullback. As I've been stating, you know, if you're long-term bullish on silver, you could be long with a swing stop right at that wave C low. Chart 72, there's the weekly chart. Again, beautiful example. Previous resistance became support on those pullbacks. And chart 73, there's the monthly view of silver. Like I said, we had an initial breakout of this 4-year coil earlier in the spring. First rally up, stalled at that first supply zone. Logically, pull back, but it held the broken trend line of the coil. Guys, I think this is eventually going to test these other supply areas up here and test the highs in 2011 over time. Chart 74, GDX, the miners, going up again today. It's nearing that recent highs. Stocks have been outperforming. Chart 75, here's the 60-minute chart. I talked about this 5 waves. So we're still extended in this. Now this also could be a nested one too. So this could be a wave 3 of 5 perhaps. But we are into a little supply zone here, so take notice of that. There is no MACD divergence here though. So that's a positive. Chart 76, here's the monthly view of GDX, just showing the next major supply zones up into here, 46 to almost 50. So that's a target over time. Some of the individual gold stocks I've been showing, here's SA, Seabridge. I listed this last week as a long idea, and it broke out on Friday. Big follow through today. So really nice trade if you caught that. One I talked about on the weekend is FSM. It's a silver miner in particular. You had a perfect 3-wave pullback into support. Used to be resistance. To me, looked like a low risk buy. Chart 79, here's the daily. You can see the perfect 3-wave pullback, ABC, into the 200-day moving average. Now it's testing this 50-day moving average. Like I said, you could be swing long this with a stop. Chart 80, here's GOLD. Moving up nicely. It's been chart 81, IAG, another one that continues pushing higher. All right, guys, the final part of the newsletter. Other trade ideas. ESOA has been on the watch list since last week, kind of at a cup and handle. Nice breakout today. Chart 83, Unity, one from the weekend. Still a very valid setup over the 1650 area. First target would be that 1840 area. Chart 84, NVIDIA, really nice move. Breaking the little downtrend line today. There's a little supply zone up here to 135 to 136 to be aware of. That said, it was a great buy in that small demand zone a couple weeks ago. Nice move from there. KISS System's been long this, of course. Oh, NVIDIA has earnings on August 28th. Please remember that. That's next week. Chart 85, AMD was another one we put out as a long idea. Notice this perfect rally off the demand zone. And today, closing right at the 50-day moving average, just shy of the 200-day moving average. That was the first major target area. Again, you could have bought it here in the demand zone, or you could have waited for this steep downtrend line to be broken as confirmation either way. Nice trade, though. Chart 86 CX, here's one from last week. It's still valid. It's kind of flagging here. Resistance is 686. Driver 87 AKAM. Here's a really tight little coil pattern. I like these little tight coils. You can maybe get a quick pop out of here. Driver 88 ALNY. Little kind of ascending triangle pattern here. Resistance is around the 275 area. Looks good. Driver 89 CRDF Oncology. Nice little base coil pattern. One to watch here. It's at a nice correction. It's tightly wound. Look at the moving average ribbon, how pinched it is. Driver 90 CNC. Nice little clean resistance area here around 79. Driver 91 CB Chubb. Nice coil. We like these coils. They tend to produce nice moves. And the final one, KVYO. This is a 60-minute chart, little ascending triangle pattern. Resistance is 3240. Okay, so there you go, guys. Some nice trade ideas to monitor. And again, we'll see what happens tomorrow. Futures are basically flat here this evening. We've come a long way. Again, we could be getting that wave 4 pullback on the indexes at any time. So just be aware of that, okay? All right, have a wonderful evening. Thanks for all your support. If you're on YouTube and you're not subscribed, why not? We have amazing stuff here. I think you'll be very happy. Talk to you later. See you next time.